I mean, when I started trading stocks in the early 90s after I sold my first company, you could understand different elements of the market better than the professionals. So I can understand, new technology from Wellfleet and Synoptics and all these old technology companies better than the traders. Today, there's so much money in these huge hedge funds, and then they have such professional research and in-depth research, there really aren't any advantages for the individual traders. And so my approach has always been, unless I know something specific, put it in cash. And so
what are you investing in? What are the areas that feel you know?
What I did in 2008 and 2009, I put everything into MLPs and MREITs, mortgage-backed securities, ones that I thought were the better companies, and I just piled in. And I also piled into Australian bonds because I thought the economy was good next to China. It was my way of playing China.
So you make one-way bets. This isn't portfolio balancing you're talking about.
No, all that asset management, diversification, that's for idiots, right? Because you can't diversify enough to know what you're doing. Right? I mean, I did my homework on Australia, right? I did my homework on the MREITs. I did my homework on MLPs, and their pricing had just gotten crushed.
So what are you doing right now?
So what I did right now, I'd been going all the dividends and everything. I just put into cash, and so I don't think stocks have fallen enough to just to say any particular stocks are cheap. Right? So when I looked at the MLPs in 2008 and 9, they were paying 18, 19% for companies that had never missed a payment, right? Had always put out all their cash, and they looked dirt cheap. Now, you look at good companies, Apple hasn't fallen that much, and just to be down 10, 15% from their highs, they're still not as low as they were 18 months ago. And so what I did was, I said, there's going to be a lot of volatility. So I bought, took a little bit of money and bought out of the money calls on the spider calls I bought on the Standards & Poor's, the SP 500, and then I did the same thing on the diamonds, which is the Dow Jones. So I bought those long when the stock prices cratered, and then when we had the big, not today, but the big run up before, I bought a bunch of puts, knowing that even though I was paying for a lot of volatility, that I thought there would be a lot of swings in the market. And so you're
just betting on volatility.
I'm just betting on volatility.
And how long is that going to last, in your view?
No idea. And that's the whole thing, right? People aren't buying intrinsic value in companies anymore. The whole Warren Buffett approach works great for Warren because he can put $3 billion into an investment and take a whole different approach than John or Sally Doe investor who can't do that.
Yeah, but so you say buy and hold is a crock of something.
Right.
I can't remember exactly.
Yeah, Shinola, yeah.
And you said that portfolio balancing is a waste of time. So what are John and Sally Doe supposed to do?
Depends how much money you have. Right? So the best way to get a return, let's just say you have $50,000 in cash. It could be 10, it could be 100, but let's use 50. First thing I would do is pay off all your credit cards because that's costing you 18%. That's what John and Sally should do first. Most don't, right? There's more credit card and student loan debt relative to personal income than there's ever been in the history of the United States. Second thing you do is you use the transactional value of cash. A lot of people say, you're losing money to inflation when you just have cash in the bank. I completely disagree. I know I'm going to be buying a bunch of toothpaste for my family. I know toilet paper. I know all the consumables that I have. I can take my cash and go get a better value. I can take my cash and go buy service.
Store up?
Yeah. Yeah, why not? I mean, how much space does toothpaste take, but you're going to spend. But that's the whole thing. The time it takes just to figure out your budget, which nobody does. The time it takes just to analyze your spending habits, you can get a better return and you'll end up with more cash than trying to fight the John Paulsons of the world and these guys who have hundreds of analysts who are working for them. Why would you try to do better than them?
You can't win.
You can't. And now it's 100 times worse because of all the program trading.
But if you have enough money that you have to put some of it somewhere, to park some of it somewhere and hope to make a return on it, where do you put it?
What I do, I don't think you have to make a return on it because I'd rather sleep well at night. I put it in cash, literally. Now, obviously, I'm in a different position where I don't have to live off of the interest paying me 1 basis point off of cash, right? But at the same time, having that dry powder, if you will, available when weeks like today or weeks like this week hit and days like yesterday and today
and
happen,
you see an opportunity.
And you see an opportunity, then you're ready to take it as opposed to saying, I can't get out, what am I going to do? And I'll tell you the other part that's better, you're going to cut your health costs because you're going to sleep a whole lot better at night.
Do you sleep well?
Oh, I sleep like a baby.